The S&P 500 daily cloud chart shows the bottom of the cloud 26 bars back at 4340.61. And for today, the upper Stark band in current price is near there, 43.46. So there's the selling zone. Once it starts reaching that, bottom of the cloud, 26 bars back, 43.41. Stoller up, 43.46. And right before the upper Stark band is this weekly diamond, bottom line 2 in purple, right above the dashed red and bold here. And that level for the rest of the week is 4330.13. And the level 2 pitchfork, this red line here, is at 4335.11. So between the weekly diamond bottom line 2 and pitchfork level 2, that's where you would start selling today, and then a little bit more in earnest if and when it hits the bottom of the cloud. And the cloud baseline in current price here is drifting downwards, and that puts a large cap on the bottom of the cloud 26 bars back, especially for tomorrow, 4353.09 for that cloud 26 bars back bottom here, and that baseline 4379. So that could drift down further and put a cap on the whole thing to the upside, and that's your selling point. And that's because for at least where we sit over here, we're in the sell the rip mode. And the zigzag has moved off of where the up wave 4 and down wave 3 for D wave printed here. And an average range of 4 bars with higher lows is required to get that to have the swing point to the upside. So every day is the average true range of 4 bars compared to the ATR of the previous day. And if that keeps moving up with higher lows, and then this will have a swing point over here again. And that's really not easy to do, climbing out of the hole. So you could see this zigzag pattern start shifting all the way up until that happens. And the swing point could happen when price has really moved up considerably. So we pay close attention to that zigzag swing point and where the ceiling for price will be. If this baseline becomes the iron lid here, then, and it coincides with not having a swing point, and definitely sell the rip area. And this qualified demand line was qualified canceled on yesterday's bar, closed above that. And this ongoing supply line for today on the 5th is at 4267.48. Okay, so this is one of those rare instances where the high is at 4268.50, and this ongoing supply line 4267.48 is under this high. So no matter what happens on a gap up above this, so if it gaps up a little bit higher than this high and then subsequently closes above it, this ongoing supply line will become disqualified. And even if it jumps up above it it will become disqualified even with the close at end of day. So I believe the only way to qualify this supply line for today would be to tick lower than 4215.75 and then subsequently turn around and then close above it, and it will become qualified. So the gap ups won't work this morning, and head south with a vengeance, and this ongoing demand line 4150.54 for today. Get a close below that end of day today, and this will become qualified, this ongoing demand line. And the old venerable 200 EMA in black here is now resistance, as it closed right under there for the bar on the 4th and barely ticked higher than where it was at for that day. 1 point, maybe not even 1 point. So yeah, that's going to be somewhat formidable resistance for now. And there should be pretty good support down here with the 200 simple moving average and the Stark band lower band 4202 just about, and the channel 3 low 4197.68, and blast down through those levels. And that's a real show of strength to the downside. And the Bollinger Band, lower band, is right down there, 4171.27. The arc down 3.618 level is at 4195.52. So pretty close to the Stoller down and the 200 simple moving average. And that's right under the D-wave, down wave 3 projection at 4168.46. So right above that a little bit, same area. So usually once these get tagged, you hardly ever see them get tagged. And that's a good indication that there's going to be a bounce up. But lately I have seen these travel through these projections either to the upside or the downside. Last ones were the upside over here. There was a real show of strength in this run up. So that could happen to the downside this time. And the QQE bounced off of a quite low level, went down to 32.32, so almost to 30, and had a little tick up. So yeah, we're really oversold here. Even though this bar from the 4th had some pressure relief on the traditional McClellan breath oscillator, as it was at 3,589 where it ended the day on the 3rd, and that ended yesterday 2374 advancers over decliners required to get back to 0. So this 3589, that's just about every single instrument in the NYA. And even though there was some pressure relief on yesterday's bar, the Shande momentum indicator on the 3rd, negative 5840, and got worse on yesterday's bar, so negative 59.72. So momentum is carrying it to the downside, and this is getting quite low. 75 would be the absolute pain threshold for the Shande momentum indicator to the downside, negative 75. And the fast trigger up went above the overbought line here. However, the slow trigger up has no indication whatsoever of bumping up above its oversold line. So let's see what happens with the fast trigger if there's a rollover to the downside. However, if the slow trigger can make it above this 25 line, then we could consider it an indication of some pretty good upside to come. And today on the 5th will be the 12th bar since this sequential buy countdown completion 13 printed. So then we can consider that stale for any more downside price action associated with it. Doesn't mean it can't go down more, but not because of this. And the qualified and confirmed process was missed yesterday. Looks like there was an open 42.33.83 and a close 42.29.45 on the 3rd. So that negated that right then and there. It would have needed to open lower than this close. It gets another chance today. All that needs to happen is to have a close lower than this close from the bar on the 4th and the bar for today on the 5th, end of day. And looking forward, if that does happen, then it's going to be a lot easier to tick lower than this low over here. If it gets qualified for today on the 5th, then the 6th has an easier chance of becoming confirmed. And until then, that sequential disqualified buy risk at 42.90.16 still remains as resistance to the upside. And you can see that the cloud conversion line is right there before it, so pretty good resistance in the immediate area.